Alrighty, I'm here with Paula, who is a Mexican tax accountant here in PV that specializes with expat people, expats. And today, I'm going to get her to introduce herself in a minute, but this conversation is about international buyers coming to Mexico here to PV, buying a condo, and either renting it out for a little bit of income to cover the costs of the HOA fees, or they've got a strategy to make money with their Airbnb or whatever. And so then we're going to talk about like the tax obligations that you have if that is you, and then maybe how to minimize it. So anyway, thank you for being here.
Thank you for having me, Paul. Okay, so my name is Paula Blanco. I'm a Mexican tax accountant. Well, I'm a CPA and I have a master's in tax. I've been in the PV area for the past 15 years. I have my own firm and I basically cater to expats who are in that situation, also people who own businesses and developers and other things. But right now with the boom in the real estate market in PV, it's been mostly people who are renting properties out. Some people have several properties that they rent, like you're saying. Some people really look at it like a way to make money, and some of them just rent them as much as they can when they're not here without complicating things a lot. But in the end, the tax situation for all of them is exactly the same.
Right. Okay, so what is the tax obligation for a person?
The first thing is we have 3 levels of government, and therefore we have 3 levels of tax. We have the federal government, state government, and municipal government at county level. And each of them are entitled to certain amounts of money paid by the people paying tax, right? At the federal level, rentals have to pay IVA, which is our 16% sales tax. That sales tax is not really a tax of their own. You collect it from the guest, you charge it to the guest, collect it from the guest, and then pay it out to the government. And that amount that you're paying out to the government every month gets reduced by the sales tax that you pay when you're paying for your electric bill, your Telmex bill, etc., etc. And then there's income tax. Income tax is based on taxable income minus deductible expenses. That gives you the tax basis. For individuals, income tax goes from nothing to 35%. But most rentals are usually at around 12 or 13%, depending on obviously how much revenue they bring in and how much expense they have. And the reason, and this is a question that I get a lot, people say, why do I have to pay taxes in Mexico? And I get that question a lot, especially because a lot of owners have all the money deposited in the States or in Canada, and the money never really comes here. Income tax law states 3 reasons for paying taxes in Mexico. One is being Mexican. Mexico taxes worldwide income too, just like the States. The second one is residency, but I'm not referring to residency as per immigration's criteria, but tax residency. You become a tax resident when your vital center of interest is in the country, when you're making most of your money here, and among other things. And the third one, and that's the one that applies to every single one of the rentals, is source of wealth. The money is generated from a property that's in the country and that cannot be moved out of the country. So that's legally the reason why everyone who owns a property in the country and rents it out has to pay income tax to Mexico. And that also causes something else that's called permanent establishment, but that's a bit too technical. Yeah, I want to gather. So that's at the federal level. Then at the state level, both Jalisco and Nayarit charge a 3% lodging tax or hospitality tax. That one you also collect from the guest and you pay directly to the state. There's no deductions, there's no credits, there's nothing there. That 3% is supposed to go towards infrastructure to develop more touristic attractions or whatever. So it's supposed to make PD better and more attractive to tourists. And then at the county level, and this has nothing to do with income, you only have property taxes. Property taxes are not related to income, and I'm sure as you know, as a realtor, they're very, very low in Mexico, and a lot of people don't take them into consideration. So the obligations an owner who's making business, who's generating money in Mexico have is to collect and pay the 16% tax, pay income tax on their tax profit, and collect and pay the 3% hospitality tax to the state.
Okay, cool. So then, is there a way of minimizing or strategies?
Yeah, well, the best way of minimizing is either reducing income, which it's not the easiest thing to do, and you really don't want to reduce income, right? I think paying taxes is a happy problem, right?
Yeah.
Which, of course, you want to reduce. But the main thing is getting expenses, making sure that you're keeping track of expenses properly and that you're getting the right proof for payment for expenses. Mexico's deduction system is not as easy and as straightforward as it is in the States or in Canada, where just the receipt works for writing things off. And I've also heard clients that write everything off, their plane tickets, a lot of things that really would be non-deductible in Mexico. And then the other thing is it depends on whether you're renting it directly or through a rental agent, or if you're using what we call digital intermediaries. Digital intermediaries are platforms that enable people to connect to the business. For the rental industry, the biggest ones would be Airbnb, VRBO, HomeAway, Expedia, Booking.com, because their websites or their apps allow the guest to choose a property, choose dates, book the room, and pay with little or no human intervention. So how taxes work for people who are doing business with digital intermediaries, changed 2 years ago. This change didn't come from the government trying to crack down on people renting their houses or things like that, which I hear a lot. This is not new taxes. Income tax and the sales tax and the 3% tax have been around, the income tax and the sales tax have been around forever. The 3% tax, each state decided, a couple of decades ago to start collecting it. So the taxes are not new and the obligations are really not new. What used to happen was that a lot of people would do business using digital intermediaries and just not pay anything. You would rent your property here and the money would go somewhere else. It would never come here. And there was really no way, and not just for Mexican authorities, this is a problem for governments all over the world. There's no way to keep track of who's doing that and who's not paying taxes. So back in 2015, all the countries that are members of the OCDE came up with a 5-level plan to ensure that all countries would be getting the sales tax they should, and that there would be some way of reporting who's using all of these intermediaries and make sure that we're paying taxes somewhere. Because a lot of these large multinational digital companies are set up in ways that even they don't pay taxes.
Right.
Because they are fiscal residents of here, but their income is really generated there, and so they get away with really not paying a lot. So, and this is not just for digital intermediaries, it's also for digital services like Netflix, Spotify. All of those were providing their streaming services worldwide without collecting sales tax that they had to, because in the end they were providing the service in the country, right? So they came up with this 5-level plan. As of 2019, Spain was the only one that was at level 5, Mexico was at level 4, and when the tax reform went into effect, now they're fully compliant. Of course, each country had to do it using the way their tax systems work. The tax system in Mexico has been 100% electronic for many years. Even our invoices are electronic. They're all stored in our SATS authority servers. It's a very technologically sophisticated system. They have incredible algorithms that can do audits automatically, etc. So of course, it made sense that this would be done electronically as well. So what they came up with was, okay, so let's use Airbnb. So you, Airbnb, are making it possible for guests to rent from owners, and you're holding the money, and then you're paying it out to the owners. So you're keeping the owner's money. Okay. That means that we can force you to withhold some tax from the owner. And the idea behind that is tax authorities get some money for sure, because otherwise Airbnb can lose their IP addresses registrations in Mexico. The IP addresses could be blocked from operating in Mexico. They obviously don't want that to happen, right? So they're getting some money, And also they're getting information on who the owner is and who's supposed to be submitting their filings, etc., etc., etc. So the way it works now is if you provide the platform with a Mexican tax ID number and a Mexican population control number, the CURP number, if you provide them with both, then they will withhold 4% on your gross for income tax. And that will be your provisional payment for income tax. I'll get to provisional payments in a second. And then they'll also withhold, because they collect 16% from the guest, and they'll withhold half of that and pay the other half to the owner. So the owner gets the gross minus 4% and 8% on the gross. That's the owner's payout. And then Airbnb submits the 4%, and they tell the government, okay, so from this RFC number, we're withholding 4% on this amount, and we're withholding 8% on this gross amount for this month for this owner, and this is the RFC number. So now SET has some money and has the RFC information. Now the owner gets the gross minus 4 and gets the half of the sales tax, and every month they have to say, okay, so I collected 16% from the guest, Airbnb took half, and then I paid out some of it when I paid out for deductible expenses. So here's the rest of the 16%, or maybe I paid more because they withhold quite a lot, right, percentage wise. So maybe if your expenses were 75% of your revenue, then you paid out more sales tax than you collected, and then they withheld. So in the end, you end up with a credit and you carry it forward. Income tax is a yearly tax, but Mexicans would never save up enough money to pay for their taxes once a year. That would never happen. So we make 12 provisional payments towards the yearly tax. That 4% that they're withholding, that's your 4%. That's your provisional payment. And then at the end of the fiscal year, in April the following year, then you add up all of your income, then you add up all of your expenses together, then you come up with the actual tax, and say it was 12%, but you've already paid 4% that they withheld from you, so you only owe the remaining 8%. That's, in a nutshell, how federal taxes would work.
Okay.
And I know it's a lot of information, but you can also give people the link to my blog, and I have very good explanations about that.
Okay, cool. So, is the advice to someone who buys a condo here, you need to get your residency, which then allows you to get your RFC, which then allows you to
do all of this,
do all of that, which is sort of the most streamlined, or the best way you can minimize your taxes.
That's right? The only way you can minimize your taxes, because what happens if you don't provide, again, Airbnb or whichever digital intermediary you use, if you don't provide them with an RFC number, then they're going to withhold all of the 16% sales tax they collected from the guest. If you set it up right and it's actually being collected on top of your gross. If it's not being collected on top of your gross, then they'll take 16% anyway, all of the sales tax. And income tax, instead of being a provisional, or a placeholder, the legal word in Mexico is provisional, 4%, then it's a flat 20%. And you can use no deductions. There's no way to reduce that. It's meant to encourage people to go and file. So you're looking at either you're getting 20% flat, or you can make it as low as, I don't know, there's some people who are here so many months of the year that they really only rent it out a couple of months, and then their tax ends up being 3%. And they actually get a tax credit because they withheld 4%. Of course, there's other places, that bring in a lot more revenue that might actually end up paying more than 20. That would be quite an extreme scenario, and then you'd have to look at the deductions there. But it's the only way to reduce it.
Okay. So you at home, you need to know when you buy a condo, if you're planning to rent it out, you can do nothing, and Airbnb is going to take a full 20%. Or if you want to make this a business and minimize your taxes and do everything properly, you've got to work towards getting your residency, which is worth doing because you will minimize your capital gains tax when you come to sell. And then there's a little bit of administration really involved getting your RFC. And the best thing to do is to get an accountant.
Yes, they don't make things easy for sure, not
Right.
even for us. Sometimes even we
Right.
struggle with the systems. There's a lot of reporting to do in Mexico. Even getting the RFC number just changed recently,
Yeah.
and now it's not. We used to do it online, and we did it in 5 minutes, and it was beautiful. Now it's not like that. So even getting to the point where you actually have the RFC number, and you get set up right. I've seen a lot of horror stories of people who go to get their RFC in person thinking it's easy. It is easy and it should be easy in principle, right? But then the authorities sign them up wrong and they make them tax residents in Mexico.
Right.
And if you're a tax resident in Mexico, then your worldwide income is taxed.
Right.
Things like that. So it's just best to have, to have proper advice from the beginning.
Right.
And then there's a lot of filings and information that we need to submit,
Yeah.
as I said, 13 times per year. So.
Yeah. And so what is involved, so someone's looking for an accountant, yourself or another accountant out there, what's sort of the market rates that when they're doing the calculation before they buy, they're setting aside, this is how much they need for an accountant each year. What is sort of the market rates for?
We usually work on fixed monthly rates because really if you brought in $1,000 or $2 million, in the end the amount of paperwork that needs to be filled out and submitted is exactly the same, and the amount of time it takes is roughly the same. I've seen fees that range a lot. I've seen accounts that will charge 500 pesos per month, and I've gotten a lot of clients from those. I've seen accounts that will give you, okay, so my base is, for an individual, my base is 3,000 pesos, and then you get to call me twice a month for up to 10 minutes, and then after that I'll bill you 3,500 pesos by the hour for giving you advice. So there's a really big range. In my case, my fees for that are 1,600 pesos per month. They're flat, and I include all the advice you need because I know it takes a lot of getting used to. And I've tried to make it easy for people. I have tutorials on how to download documents from Airbnb, tutorials on how to pay your taxes with X or Y bank. So that because I know it's daunting. It's a lot of information.
And actually, do they need a bank account here?
They don't necessarily need it, but it's just better to have it because in the very unlikely event of an audit, if the money that you're filing here is not going here, the auditor would want to see your bank statements.
Right.
And if you're bringing in foreign bank statements, then you need to have them translated by a certified translator and apostilled.
Okay.
And I cannot imagine what translating in apostilled, the bank statements apostilled would be like. So it's just better to keep it here. I have a lot of clients who prefer not to, and they prefer to risk it. Audits are very, very rare because they lose a lot in the exchange rate. But it just makes it easier to reconcile and everything if everything, both income and expenses, take place here.
Okay. So just to go over things again. So someone's purchased a condo, they've taken possession. The next step is reaching out to someone like yourself, and probably a lawyer to get their immigration.
Yes, I work with an immigration attorney. That's actually the first step is to start the residency process at any consulate.
Yeah.
My experience from what clients have told me is that it is worthwhile, even though you don't really, it's not really a complicated process and everybody can do it on their own and it cannot even be started in the country. It's best to get some advice from an attorney on how to fill out the forms, exactly what to bring, etc.
I had a lawyer and I highly recommend getting a lawyer to help you through it is simple, but it is so much easier to have someone just boom, boom, boom.
Yeah.
So you start that process in your own country. Your lawyer would help you out. You start that process in your own country. Then you come here for sort of fingerprints and paperwork. Then like a week or two later, you go back to the office.
Okay, yeah, and this is where things get interesting. So if you're a permanent resident, after you get fingerprinted, when you get fingerprinted, what happens is they send all of your information to Mexico City, and Mexico City prints the cards. That's why it takes some days for them to come back because they're printed in Mexico City and then they're brought back. then you get your resident card. If you're a permanent resident, then the next step would be getting an appointment with SAT to get the RFC number, and that's it for the moment, right? If you're a temporary resident, SAT and immigration just created a very weird loop that the immigration attorney I worked with seems to have figured a way out of. Because when you're a temporary resident, you don't have permission to work. Immigration considers work earning money in the country in any way. It doesn't mean being employed, it means having the ability to produce money. But unless your residence is given because you're actually employed by someone, you don't have permission to work. Now, SAT made it so that now getting the RFC is done in person. And their criteria when you go there in person with a resident card with no permission to work is, well, then you don't need an RFC, I won't give you one. Getting permission to work, the first document that's required is the RFC document. So, yeah, yes, when I found that out, both the attorney and I had a bit of a panic attack, but she seems to have found a solution, which is you can do a pre-registration with SAT, and she can submit that to immigration and say, look, I am pre-registered, please grant me permission to work. Of course, it's subject to you actually getting the RFC number as soon as you get your new card, or they can cancel your residency completely, right? And it seems to be working for now. This is very new. This just changed a few weeks ago, so we're still figuring it out. But it's just better if you can go permanent from the start, also for capital gains. But yeah, well, we found a solution. But that's the next steps would be if you're temporary, then you go to immigration again. Well, you do a pre-registration, then you go to immigration, apply for permission to work, then get the RFC number, and then go back to immigration and say, yes, I got my promise, I got signed up. Yeah.
Right. So it's very complicated, isn't it?
Very.
Which I think is why, really, if you want to do this, you need to have an accountant who can take you through the steps. Right? So you're probably going to have more questions. If you have any accounting questions, get in contact with me or Paula, or if you get in contact with me, I'll get Paula to answer them about that. Thank you.
You're very welcome. Thank you for having me.
Anything else we need to talk about in this?
Not for now, because it is a lot of information. But this is in a nutshell how it works. So.
Awesome. Thank you very much.
You're very welcome.
So thank you. Bye.
Bye.
Alrighty, so I know it probably sounds quite complicated, but you're not going to be the first person to rent out your property here in PV. Expats have been running rental businesses out of their condos for many years. It's just a matter of going through the steps to set yourself up when you first take possession of the condo, getting your residency, getting your RFC, and getting a good accountant, systems in place, and then it becomes very easy. And people do very well out of renting out their condos here in PV, so don't let it be too daunting. Anyway, I hope that video with Paula provides some value. And if you are thinking of purchasing real estate here in PV, I help clients and friends buy and sell real estate here. So please reach out to me with any questions. And of course, if you haven't already joined my newsletter, go to my website, join up to my newsletter, and you can find out about new listings, new developments, educational videos on how to purchase real estate here safely with that newsletter. Thank you for watching, and I look forward to meeting you one day. Bye.